How's it going, everybody? Estas here. Welcome back to another video. So the stock market absolutely crushed it today. We had the S&P up 0.8%, the Dow went up 1%, the Nasdaq 100 went up 0.9%, and we had the Russell up over 1.5%. So today we're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, take a sip of your coffee, and yes, I'm drinking a coffee at 6:45 p.m., guys. What else is new? I'm a coffee guy. You guys got to understand that. Make sure to hit the like button, subscribe, and check out my Patreon link down below, and let's get the party started. So if you saw my video earlier today, we talked about how the rally from today in the markets coupled with the rally from yesterday could, keyword could, have been a bull trap, right? And you guys can see on this 4-hour chart, we are seeing some selling pressure at that level that we talked about earlier today, right by the 180 moving average on this 4-hour chart. And if you guys can see this chart with your own eyes, which you can since you're watching this video, you can see we got rejected at this very moving average back in the end of September, just about 10 calendar days ago, and in the middle of September at about 447, and the end of September we got rejected at about 445. So the fact that we are seeing some selling pressure kick in here right around 440, 441, and we close the day on a downswing at about 438, the fact that we're seeing that selling pressure is a bit worrisome to me. And as of now, the futures are up a little bit. They're up about 0.05 to 0.1% when it comes to the Dow, the S&P, and the Nasdaq futures. So in other words, they're really not making any significant move to the upside or the downside. So I'm going to be watching these futures in the morning. I want to see, do we get a big gap up or a gap down in the morning? That's going to give us more direction overall. And going back to the 20-day chart, well, to the 20-day chart, I don't even think we looked at it in this video quite yet. What we're noticing is the selling pressure. Like I said, we hit 441, 442, and that was at about 10:15 a.m. on the East Coast, guys. So the rally really came pre-market, and then the first 30 minutes of the day, and then the rest of the day was just consolidation followed by a sell-off, which started when I uploaded my video from earlier. You guys can see at about 1 p.m. we went from 441 down to about 438, losing close to 0.6% of value there. And this is a bit worrisome, again, considering that we're seeing the sell-off right at a lower high. So this could be a bull trap. It very well could be. And I'd love to know your thoughts. Link down below or drop them down below. I don't know why I keep saying linked. Maybe because I always shout out the Patreon, the Webull link, the M1 Finance link, which check all those out. Hey, they're linked down below. But drop me a comment. Let me know your thoughts. And for QQQ, let's pop this up. What we're noticing is very similar price action, right? We're noticing how we saw a rally today and yesterday from 350 up to about 365, and we're still under the main 180 moving average, which was resistance end of September, right? And now we're seeing selling pressure kick in from 365 down to about 362.90, 363, and on the 20-day chart you can see that as well, and on the intraday chart you can see a lot of the move came this morning, right? First 30 minutes to an hour of the session and in the pre-market, and then we started selling off for the latter half of the day. So at this point, I mean, it kind of looks like a bull trap, guys, but I don't want to get too ahead of myself because I know once you think it's something, right? A bull trap, whatever, the opposite could occur. So I'm still kind of in the middle ground here, waiting for more direction. And again, I'd love to know your thoughts down below in the comments. And we also got jobless claims today. Weekly jobless claims totaled 326,000 this past week, a drop from 38,000 from the previous week, and well below the estimates of 345,000. And on top of that, we got news this morning, I believe it came out last night, about the debt ceiling, Senate Democrats were poised to accept a GOP proposal to defer the slowdown or the showdown over the debt ceiling until later this year. I believe they decided on December. And as administration officials and corporate executives issued dire warnings, yada, 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 about the dangers of the possible default, and the proposal would extend the debt ceiling into December, provided that Democrats affix a dollar amount to that debt level. A deal could pave the way for a procedural vote in the Senate soon, to be followed by final passage at some time later this week. So I guess that kind of sparked the rally overnight. And again, we already broke down the technicals, so you guys are seeing what I'm seeing and kind of my perspective. So drop me a comment, hit the like button if you guys are finding value thus far in this video, and let's talk about some stocks as earnings season is approaching us this month. In a couple of days, we're starting to get some earnings, and later in the month, the latter half of the month, we're getting a lot of reports coming. So I'm super pumped, man, because when stocks aren't reporting earnings, things are a little bit more boring. But once we have some big tech names, oil names, banks, the big boys out there, once they start reporting, it rattles up the markets and things start getting entertaining and fun, especially in terms of making these videos. Don't get me wrong, I love making these videos, as you guys can tell, but they're even more fun when we have earnings and exciting news coming out. So let's go over some companies. Snapchat is number one, ticker symbol SNAP. This one up over 4% today, up over $3 per share. And you guys are seeing it's kind of breaking out. And we called this out a couple of weeks ago, a little bit over 2 weeks ago. We talked about how Snapchat was trading right by the resistance of this channel, and then we saw it break out to $83 from $75. And I told you all when it was at 80, 83, 84, well, it didn't get to 84, but when it was at 83, I told you guys, look for a pullback, right? We got the pullback from 83 down to about 70. It dropped close to 17%. So it got almost into a bear market just like that. And now we're pretty much recovering a lot of that loss. And it looks like we're trying to continue this trend as we're trading above both moving averages. We held a higher low at about 70, 72. Now we're in the mid to high 70s. I think this is a play right now. Probably back up to $80, $83 per share at least, right? 80 being resistance from the end of July, early August, September as well, and obviously 83 being the resistance from the end of September. So I think Snapchat has some headway here, and this is one of the companies that does report earnings this month on the 21st of October. So in 2 weeks exactly, what's today? Thursday. In 2 Thursdays from now, we're going to be getting Snapchat earnings. Twitter is another one that I'm looking at, ticker symbol TWTR. Let's see when they report. They report on the 26th, so they're in about 3 weeks from now. And Twitter has not been doing well these past couple of months, right? It was an $81 stock back in the end of February. Now it's sitting at $63. It's currently down 20% almost from that point, meaning, you guessed it, it's almost in a bear market. And with today's move of over 4% in the green, up over $2.50 per share, we're trading above both moving averages, and it looks like we're trying to push up towards the resistance of this wedge here on the 4-hour chart, which is going to be anywhere from $65 to $66 per share. That is where we are going to see some selling pressure, believe it or not. But if we're able to get out of there, let's say we get a good kick in volume, maybe a catalyst or two, I don't know. But if we start breaking mid-60s, into the high 60s, low 70s, this could be off to the races again with earnings coming up in a couple of weeks from now. I really like Twitter here for a breakout candidate because it's just been a quiet stock the past couple of months. So I'm going to put my alert at $65. Mark is at or above 65, and I'll watch it from there. CAG is another one, Conagra Food Brands or Conagra Brands. They reported earnings, I believe, this morning, so let's see what they did. Let's see. Actually, I didn't even look at these earnings before. So this is live reaction. And it's not the most sexy company out there. Oh, it's not Apple, Microsoft, Disney, or even Disney's not the best company out there in terms of flashiness. But hey, it's a food company, right? Conagra Brands, and they reported EPS of 50 cents versus 49 cents. They beat that, and sales came in at 2.65 billion versus 2.54 billion estimated. So double beat for Conagra. And let's see, did they do guidance? They reaffirmed full year 2022 EPS guidance of $2.50 versus $2.46. So that's higher than the estimate. Not too bad. Did they do that on revenue too? I'm not seeing revenue, but they did grocery and snack sales in Q1 up 4.9%. Food service sales up 20%. Not too bad. I mean, actually, that's pretty good. So not a bad report here from what I'm seeing. Very briefly with Conagra Food Brands or Conagra Brands. I don't even know why I keep saying food brands. And the stock has been reversing. Look, it's out of the moving averages on the 4-hour chart. It's trading clearly above them. We're seeing a golden cross as well. The 50s crossing above the 180 SMA. And earlier today, we saw a huge pop in the stock, taking out the highs from end of September at about 34, 35-ish dollars. That's where we were late September, and today we got up above 35. You guys can see that. And if I zoom in a bit on this 20-day chart, you can see 35, and then we ended up pulling back towards 34. Now we're seeing a bit of a pump after hours, and overall, guys, hey, this dip looks pretty good. You know, it's still holding the uptrend. I think buyers, there's potential that they end up stepping in right here, right? At about 34, 34.50, maybe 35. And this thing could have some leg room or headway, whatever you want to call it, from here, 34, 35, maybe up towards 36, 37, which was support throughout March, April, May, June a little bit, and that's now acting as resistance. So look out for Conagra Brands. It's beaten down. It looks like it's reversing. Again, it's not the sexiest stock out there, but hey, I think there could be upside in the short to medium term. Tilray is another one, which if you guys know Tilray, this one is insane. It's an MJ stock. I'm not sure how many of you guys have been or how long you guys have been in the stock market, but I remember back in 2018, maybe it was 2017, this stock was like $150 per share, and now it's $10. It's insane. Let me show you guys this chart. 3-year chart. Let's go to the 20-year chart, actually, because it's dated back. Oh my gosh, it was way more than $150. My memory is doing me wrong here. It was $300 a share, guys. That was back in September 2018. It was $300. That is unreal. Oh my goodness, guys. Now it's $11. Could you imagine buying that at $300? You'd be down 99.99999% right now on your position. And let me just look at the market cap, TLRY. I'm going to pop it up here on my phone. Market cap right now is $5 billion. Wait a second. So you're telling me it was $300, now it's $11. Yeah, there's definitely some changes to the shares outstanding or something, because there's no way it was $300. And if you do the math, it's $5 billion market cap now at $11. If it was $300 a couple years ago, there's no way it was a multi-$100 billion company. But anyway, let's not get down that rabbit hole. Tilray, they reported earnings today as well. Let's see what they did. They did a $35 million loss. I'm assuming they didn't obviously make money because they just lost $35 million. What's their revenue looking like? Revenue came in at $168 million versus $117 million a year ago, and versus the $172 million estimate. So they missed sales estimates. And EPS was in line. 8 cents came in right in line with the estimate, and the stock is just beaten down, guys. I mean, it was $77 back in February. Now it's $11, $10 per share. It really hasn't moved at all the past couple of weeks. In fact, it's been downtrending. So I'm not touching this thing with a 10-foot pole unless it starts getting out of these moving averages, maybe into the teens again, 12, 13, 14. Even then, I really don't want any part of this industry because there are so many players and no one knows who the heck's going to be the clear-cut winner in the MJ space. I have no idea. So I couldn't really tell you who's going to be the winner. So for me, when I'm in a situation like that, I decide to just not participate, right? Because there's no point, at least for me, right? Sure, you could buy an ETF. MJ is the ETF, which is a combination of a lot of these stocks. That could be one way I'd consider to play it. But in terms of picking individual stocks, I'm just not in that game right now for this particular industry. JD did very well today. Chinese company up 6%. It's breaking out of this wedge. You guys can see it's moving above the moving averages as well on this 4-hour chart. And it looks like it's on its way to maybe start testing the 80s, maybe mid 80s again, but I don't want to get too ahead of myself considering we're only at $76 right now. But the fact that we're breaking this wedge, we're above the moving averages, that is a very good sign for JD.com. And did you guys see Baba today? Holy crap. Baba was up almost 10% on the day. It went up 8.26 at the close, up almost $12. And even though I'm still down on my position, considering my average is 180, I did recover a crap ton of losses today. Again, with Baba being up 8%. So that's pretty nice. And this is not a swing for me. Full disclosure, it's not a swing. I'm holding this for the long term. And all you guys in my Patreon know that because you get all my buy orders, and I've been buying this thing pretty much every week on the way down here. As recently as last week, I bought, or it was actually earlier this week, I bought it at 139, I think, or maybe even 138. You know, I bought more. So yeah, I like these Chinese stocks. Call me crazy, but I'm having a little bit of my portfolio. I'm putting a little bit in these stocks. Well, really just one, which is Alibaba, right? And the airlines are starting to report soon. DAL is reporting on the 13th. That's in 6 days from now. So what is that? Next Wednesday? They're reporting, and this stock has been breaking out, and I feel like it's correlated with the cases of you-know-what going down ever since the past couple of weeks, the middle of September to be exact, and these airlines have been going up. Right? Hey, I'll take it, even though I'm not invested in these. But the fact that we're seeing them moving up, they're trading above the moving averages, they're breaking out of, at least this one is, a lot of them are as well. DAL is breaking out of the channel, downward channel here. This is a great sign that we're looking to start pushing back maybe to the mid-high 40s, low 50s. And what you guys are seeing here is a recent pullback, right? DAL was $46 a couple of days ago. Now it's at 43. It's down about 5% in the past couple of days, and we're fighting to hold a higher low at $43, $44 right now. And yeah, I mean, this could be a dip buy. I'm not telling you guys to buy, but this could be a dip where buyers step in, take advantage of it. And let's say it fails holding 43, 50, 43. It could easily fill the gap down towards the 180 SMA on this 4-hour chart at about 41, 42, which could also end up being a dip buy. So I like the airlines here moving forward as short-term plays. Peloton's another one, the last one that we're going to talk about in this video. This one had a pretty good day today, up 5%. Call it a relief rally. I guess it is a relief rally, considering it was so oversold and it had pretty much zero green days over the past month. I mean, this stock went from 115 to 80 in a straight line, no joke, meaning it went down $35 or about 31%, putting it well into a bear market. And as it got down to $81, it actually hit the bottom of this channel, the downwards channel, and now we're seeing that relief rally. And it looks like we're trying to break above the 50 moving average as well here on the 4-hour chart, which happens to be in the middle of this channel. So I think now that we broke 85, we're starting to push 86, 87 past this 50 moving average, there could be maybe a push up towards 95, maybe upwards to of $100 per share, which is right by the 180 moving average on this 4-hour chart. So keep your eyes on Peloton. Even though for me it's not my ideal setup, we could still make money on this. There's about 8 to 10% upside. Let's say it goes to 100. There's 8-10% upside from where we currently are right now. So I'm going to wrap up the video here, guys. I hope you enjoyed it. If you did, hit the like button, subscribe, drop a comment, let me know your thoughts, and check out my Patreon. If you guys want to keep up with all my buys, sells, call outs, morning update videos, plus more, I'm literally posting all my moves in real time, from long-term investments to trades to option moves when I make them. Everything's on Patreon, so check it out. Link down below. Or you guys can go to StasserFest.com/Patreon. That's StasserFest.com/Patreon. Make sure to also get your $30 from M1 and your 2 stocks from Webull up to $1,600. Those are also linked right down below. And that's it. I'll catch you guys in the next video, which I made one earlier going over 3 other stocks to buy. Check it out. I'll pop it up here. I'll see you guys there. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out, guys.